The market rallied significantly yesterday on the increase in Fed funds rate by only 0.25%. Now, this is a decline from the 0.5% that had been the norm. But Fed head Jay Powell said that this level of increase would be appropriate for some time. But for how long? The market thinks that the increases will continue into the middle of the second quarter of 2023. The market then thinks that the Fed will actually start easing. But I don't think so. There are several reasons. Number one, inflation will stop going down. And number two, unemployment will be flat. The Fed, by law, is supposed to focus only on two considerations: inflation and unemployment. The easing inflation was the reason why the Fed said that they are slowing the rate of Fed funds increase. But here's the problem. Raw material prices have stopped easing and are now flat, not going down. It was the decline in raw materials, particularly gasoline and used car prices, that were the main drivers of the decline in inflation. Now, used car prices are still declining, but other raw material prices are not declining. They are flat. That means that the volatile parts of inflation are no longer moving in the right direction. At the same time, sticky prices like rents and wages are still increasing. They will not come down until late this year at the very earliest. So headline inflation won't be coming down anymore, maybe a little bit over the near term, but by the second quarter of this year, it will not be coming down at all. And that will lead to the Fed keeping increasing Fed funds by 25 basis points for month after month after month. At the same time, the non-farm payrolls, the recession is going to start to bite, but not much. So unemployment rates will remain low, and it won't be until the second half of 2023 when we will start to see the recession bite enough to cause non-farm payrolls to stop rising. So the Fed will not ease until late this year, until at the very earliest. Now that will shock the market because they are looking for Fed easing earlier. Now, my positions, I remain long the stock market and gold, but I think I will probably be bailing out later in the second quarter of 2023 as the market begins to realize that the Fed is not going to be easing in the second quarter, but not until late in the year at the very earliest. All right, everybody, be sure to check out my video here on YouTube, all about the outlook for the coming year. Talk to you later.